What's up, guys? This is Jazz. I'm gonna keep this pretty short and simple. Since here we had rate cuts and markets kind of dwindled down, we kind of went up here in anticipation of good earnings from mega caps and Fed rate cuts. And then we've seen a nice little pullback from the climax. On Friday, that was a pretty important day. We had a nice sell-off below AVWAP and also the 50-day SMA. But more importantly, we got a bullish hammer close, which is a really good sign for a reversal, or at least, a dip buy back to the upside. And we see that happen sometimes in the past. Like over here, we have a bullish doji. Over here, this is bearish, but it's still a hammer. We have the tail, so on and so forth. It's something we do see often. So this is a good sign we like to see. But some things that do alarm me are that today, the next day, actually we don't have one thing I do look for is for the volume delta to also be positive, indicating that, we would have more aggressive buying, and it kind of would tell me give me insight into market sentiment a little bit. And usually before, let's see, even right here, the next day we recover, we have boom, a lot of bullish delta. Even after this terrible day, the next day of couple days of recovery are bullish delta, but right here we still have net bearish delta even on this gap up. So that's not something I'm too excited about. That is kind of like a yellow red flag for me. But seasonality wise, we're in a pretty decent standpoint. Like most of the time in November and December, they're pretty powerful months due to asset managers wanting to mark up their portfolios into the year end. And this is because they would have more assets under management and they get paid on a percentage of their assets under management. So therefore they would get a bigger bonus. And that's why markets usually they tend to rally towards year end, because we kind of get what's called a seller's boycott, where usually we'll get a rally on light volume. There's not too much conviction. We'll have little gaps higher and tighter intraday ranges, but we wouldn't have sustained, typically see sustained volume and a massive explosion. It's usually just what I said earlier, kind of like a seller's boycott. So, but you can't just fully say we're gonna always have a nice Christmas rally. Last year was not the same situation. If we look into November going into December as well, we did float higher on less volume, and then it didn't end up going so well. But also last winter wasn't a normal winter because we also had election season going on and news was a little more hectic too. But yeah, I genuinely still think it looks decent for a long. But another thing that kind of has me on edge a little bit is the market breadth. So if we just take a look, and let me just squeeze this down a little bit, but let's just start from the most important 500 stocks above the 200-day average. As you can see, since our recovery, we've kind of started to stagnate off, and we're starting to get a little bit of a negative divergence on the 200-day. We're still above 50, which is the main thing I'm looking at, because if we start to, if more than 50% of the S&P 500 is below the 200-day moving at, that's a sign that I want to, maybe not be in the market, not participate. If we look on the S&P 500 stocks above the 50-day moving average, we see kind of what in the last video we were monitoring the slight bearish divergence, and we continue to go higher as more and more stocks fell below the 50-day moving average. And that doesn't mean that we can't continue to go higher and lose our breath. I'm just saying it's not the healthiest sign for the market, because eventually it's going to catch up. You can only have a couple names holding up the market for so long. Looking at the 20-day, everything looks fine. We're getting primed for a little bounce. Looks decent. And on the 5-day, we've already kind of got that bounce. On Thursday, Friday, we're looking to see, what happened if we went even lower and kind of had a curl down like we had back in October. That didn't happen, so we should see and continue to push over. I expect a little bit higher across all these breaths, but in the long run, these breaths still don't look very, very appealing. So I still wouldn't, it's not like a all-in situation, but I still want to have some exposure because I think the market could still melt up. But there are a couple of signs that, are telling me to be cautious. I wanted to go through a couple stocks as well that I think we should be looking at. Number one are the two that had earnings. We have ASTS. They had pretty decent earnings, even though it is down. The actual earnings report was pretty fine. And in the long run, it looks like might be bouncing off the 50 SMA and kind of flipping, resistance into support. And that's usually a good sign. Another setup that looks decent is Rocket Lab. Their earnings today were pretty great. They're up at 55, but yeah, we dipped below the 50-day moving average. It looks as we will end up recovering it. And same situation, we see resistance from earlier trying to be flipped into support. I think we will continue up towards 70 and 70 plus later on into 2026. A couple other things that I thought were interesting. If we look at Bloom Energy, and right now what I'm looking at is like relative strength, right? What stocks, when SPY was, falling down here, when IWM was falling down here, right? What stocks were holding their own and stayed the strongest? And I kind of liked how Bloom Energy was doing here. I think we might see some sustained. It's already been an absolute insane run this year, going from like 20 to 130, but this definitely has room to run even higher because the strength looks pretty nice. Also, Johnson & Johnson held their own pretty well. This dip comparatively was not that bad, and we've held the 50. We're getting some bullish inflow again. I definitely do think this could be a potential spot to pick up some shares, or maybe even buy some like deeper dated 190 calls just to see if you can maybe hit 200. I'd have to look at the options pricing, but Johnson & Johnson held up pretty decently. I kind of like that. Another one I really like is Lemonade. Lemonade, they reported stellar earnings. And usually after stellar earnings and a gap up, I like to see how they digest. And we had a down day. We held what these are our control bars, and we like to see our control bars be held at above 50%, and that's kind of what happened. So I think Lemonade is set up to continue to the upside. And another stock I like is Lyft. Is looking to, it basically did break out and make a new all-time high, at least a multi-year high, not an all-time high. But this breakout, seems to be pretty good. They had decent earnings. I'd be looking for a continuation above 25 towards the end of the year. Another stock that I'm looking at is INSM. Oh, what did I type? INSM. Insmed, they've held their own for the last couple of days pretty well during the market will cool down. Obviously, another one of those parabolic stocks that went kind of crazy this year. But yeah, this definitely has room to run above 200. So I definitely would be looking at INSM to the upside. And then FSLR, First Solar, doesn't once again seem like it was impacted at all by those days of downturn. So the relative strength is definitely there. They had stellar earnings once again. I definitely do think EOS goes above 20. Another one of those parabolic stocks that was probably like $2, $3, $4 and now, almost a 10x. Yeah, but very, very strong. We like to see this. And another one that's been taken off was Datadog. They reported earnings. Once again, I'm looking to see how it digests, and it looks like it's going to be one of those like AppLovin or AVGO situations. When they reported earnings, they just gap and go. And yeah, I'm definitely interested in DDOG to the upside. It might be in new price discovery. And so this is a very bullish 3-bar. I'd like to see where this one goes. STX and also related stocks like WDC and any other related stock, they've been on an absolute tear this whole year, and I think it'll probably continue. Like SanDisk, like absolutely insane, you know? So it seems like people are not giving up on these names yet. It would be something I would still be looking to trade, but still being cautious because the gains this year have been really huge. Rig is taking off, and I definitely do like the setup. It's a very nice breakout. It's held its own for the past couple of weeks during the market downturn. Looks really good. Also, Lamb Research, LRCX. Lamb looks pretty good. New highs being made. Very nice. Not bullish, but, you know, good hammer. Definitely see this continuing to float to the upside. And here's a couple of stocks I thought were interesting. And you'll see what I mean by interesting. But we have Albemarle. And basically what I see, why I call it interesting, is you can just see the absolute terrible time the stock has had over the last like three-ish years or so. But what's very interesting is the immense amount of volume that's been entering the stock. And I think what we're seeing right here is a lot of accumulation of the stock. It's been a very well performer this year, but it's been, you know, looking to make new highs. And I think that this could be a decent long-term buy, but it just looks pretty interesting. Another stock that looks interesting is Helica Mining. You know, they reported earnings, looking to break out again, but yeah, very, very interesting on Helica. And as you can see, once again, the amount of volume this year has been insane on this stock. So I think this is something just to keep in your mind. I think a breakout is due, if not tomorrow. But yeah, that looks cool. Rivian was kind of interesting as well. We have Rivian reporting earnings, and what's kind of interesting is we haven't seen this kind of buying spike in a while. So it looks like I haven't personally gotten to take a look at the earnings. I'll probably take a look at the earnings and leave a note in our Discord server. But yeah, this looks pretty good. If we're able to push out and make a new multi-year high, I would definitely be interested. It's not something I would get into right now. I'm once again going to read the earnings, but this definitely does look interesting. And lastly, the last stock I'll go over is DigitalOcean. Stellar earnings, and once again, this looks like a gap and go situation where I wait a couple days to see how everything digests, and it looks like we're just taking off absolutely. I'll take a look at these earnings once again. We've seen the volume being picked up here in the last couple months even, and this looks very interesting to me. So yeah, DigitalOcean definitely on my radar. Also all the other stocks I talked about. That's going to be it. Hopefully you guys got some insight. Just to give you a little bit of context about what I'm doing with my portfolio personally. Yes, I do think the market's going to go up. No, I am still not fully all in. I'm going to be playing it relatively safer still, just because the breadth to me looks terrible. So I'm still net bullish, but mostly I'll be participating in selling puts and not as much as going fully risk on into the market. But I'll explain more in my Discord later. See you guys.